What's up, everyone? Welcome to day 5 of my brand new small account challenge. Today, I crossed the first big milestone. The account is now up over $25,000. That's right, from $2,000 to $25,229 in 5 days. Wow. Okay, so we're going to do a little overview of looking at the progress over these past 5 days, the type of stocks I've been trading, the time of day I've been trading, and I'll talk a little bit about, of course, the strategy. Now, I don't want to repeat myself. Just last week, I uploaded a full-length training, a masterclass on the strategy that I would be using during this small account challenge. I, of course, will put a link to that episode at the end of today's class, so those of you guys that didn't see it can go back, rewatch it, and get that refresher. Now, I also want to begin this episode with a big thank you to you guys because, as you know, all of the profit from this small account challenge, for me, is getting donated to charity. And I gave you the opportunity to help me increase that donation. I said, for every person that hits the thumbs up and subscribes to the channel on episodes during this series, I would add an extra $1 for charity. So as of today, we are now at, well, let's check in on it. So let's see. I'm going to go up onto the slide deck here. Today, my account is up 33%, which helps me cross 25,000, and we are at $65,373.41 going to charity. You guys, like I said, you're setting the curve really high. I'm playing catch up back here. What I need is one really nice big green day. But you know what? It's possible that'll happen because if you look at my account here today, these are the stocks that I traded. But check this out. I started today with equity of $18,953. But right now, my buying power is already up over $150,000. Why? Because it combines today's realized profit with my equity, and then it multiplies it times, 6. So many of you guys know I am currently using an offshore broker. Their minimum account size is $500. So 5 times 6 equals $3,000 in buying power. Now, just this week, FINRA, the U.S. regulator of the financial markets, approved an amendment to the pattern day trader rule for the first time in nearly 25 years. Now, I say this because this is really going to change the game when it comes to day trading and the use of offshore brokers. Right now, the competitive advantage that offshore brokers offer is that they'll allow you to day trade with as little as $500. They do not enforce the $25,000 minimum pattern day trader account balance because they're not firms located in the U.S. So a lot of U.S. traders have gone international to day trade. Now, that's not good for the U.S. brokers. And so guess what? They've been petitioning regulators to say, reduce the PDT rule. It's not fair. We're at a disadvantage. And FINRA has finally agreed to approve that proposal to reduce the amount to just $2,000. So when this actually goes through, what will the offshore brokers do? What's going to be their competitive advantage at that point? Well, the only thing that they could continue to offer is increased leverage. Today in the US, you get 4 times leverage. So if you fund an account with $25,000, 4 times leverage gives you $100,000 of maximum buying power. The offshore brokers are currently offering 6 times leverage, as you can see I'm getting right now. So 6 times leverage in this account still is quite appealing, especially if you've got a small account. But I should probably be the first to remind you that trading is risky and my results are not typical. And as a beginner trader, you should never trade on leverage. You should not use leverage unless you really know what you're doing. How do you know what you're doing? You're already making some money. You've first proven profitability by using a simulator. You then traded with real money without leverage for a period of time, proving profitability. And then you're at a place where you're saying, okay, I'm willing to start dipping my toe into using a little bit of leverage to see if I can amplify my gains. But remember, leverage is a sword, whoosh, whoosh, this is a ruler, that cuts both ways. So as quickly as you can grow your account, you can also chop your account in half. And I've seen it happen. So you've got to be really careful when it comes to leverage. Okay, so let's go ahead and jump into today's episode. We're going to break down how I was able to turn an account from 2,000 into 25,000 in just 5 days. So this is the account growth as of the end of day 5. Started with actually just shy of $2,000. Today's starting balance was $18,953. I'm up just over $6,200, which gives me a total balance of $25,229. Now, one caveat. Today's profit does not include commissions, but But of course, my starting balance today did subtract all of the commissions from days 1 through 4. The commissions don't get taken out until the end of the day, and you can estimate what they'll be, but you don't know exactly what they'll be until you see your balance the next day. So just to put that out there. Total growth in the account right now, 1,264%. Wow. And these are the 3 stocks I traded today. Now, today, I did have my first loss in the small account. Now, you wouldn't really see that by looking at this because I am green on the stock that I took the loss on, but it was BIAF. And I actually had 2 losses. So now let's look at the statistics and the metrics behind this success that I've had this week. So this is what it looks like. This is sort of the high-level anatomy of growing an account from 2,000 to 25,000. The total profit is about $23,752. Again, this amount does not subtract commissions. Whenever I export my trades off of this platform and I import them into TraderView, which is this software right here, it does not include commissions. So you'll see my total commissions are listed as 0. So this reporting software is really helpful. However, when it comes to importing trades from this particular offshore broker that I'm using, they don't import the commissions. So it's a little deceiving. So we know that I made a little bit less than this, but not by a lot. It's pretty close to accurate. Okay, so the total gain, right around $23,700. And my average winning trade is $1,300. And my average losing trade is $17.20. That is a phenomenal profit-loss ratio. So today I took 2 losses. And so on a total of 20 trades, I now have 18 winners and 2 losers, which gives me accuracy of 90%. My average hold time is 1 minute long. Some of the trades were shorter, some of the trades were longer. The average hold time for my losers, 10 seconds. So the way I approach this challenge, and I laid this out for you in my masterclass, is that I would focus on trading a philosophy known as breakout or bailout. If I get into a trade, it's because I'm looking at a very specific pattern and I'm expecting almost immediate resolution. So if I don't get it, if the stock starts stalling, I'm going to jump right out of the trade and just let it go. So I followed that philosophy very well this week. And of course, you really have to when you're doing a small account challenge. Now, if we look high level, days and times, based on the day of the week, Thursday was the slowest day. And I think that there's something interesting that we have to note here. As you may recall, on Monday, I came in with a bit of an aggressive goal of doubling my account. And I knew I needed a little bit of good luck to make that happen. So I wore my lucky sweatshirt, but not 1, I wore 2. So I have my lucky sweatshirt times 2. I doubled up on the luck. Now, after it worked so well on Monday, of course, I did the same thing on Tuesday. And on Tuesday, again, I doubled my account. So when I came in Wednesday, there was no question I would be wearing 2 sweatshirts. And yet, sitting here wearing 2 sweatshirts, dripping sweat, I failed to double my account for the 3rd day in a row. So I said going into Thursday, I'm not wearing 2 sweatshirts. This is a waste of my time. And it was the worst day of the week. Now, this is certainly, without doubt, not a coincidence. So you better believe this morning when I sat down, I put my lucky sweatshirt on, not once, but twice. And it has certainly paid off. So I'm back on the right track here. And yes, am I getting a little overheated here? Certainly, but it's nothing that a little bit of iced tea can't solve. So cheers for those of you guys that enjoy caffeine. Now, you know, I have to go a little easy with this stuff. I'm a little sensitive. However, I give myself caffeine as a reward for a job well done. I do not drink caffeine before I start trading because for me, what I find is that it makes me a little too trigger happy, makes me a little too aggressive. Next thing you know, I'm pressing that buy button a couple extra times. And in the moment, some of these trades are so quick, I really need 100% focus. So while caffeine affects different people differently, for me, I actually trade better by not having caffeine until I finish trading. And then I finish trading, I have a little sip of caffeine, and that is my reward. So cheers for those of you guys that also drink caffeine. Okay, so with that said, unfortunately Thursday, because I didn't wear my double sweatshirt, was my worst day of the week, but the rest of the days were pretty solid. In truth, This week was interesting, and I was actually just talking with Ted about it. Ted runs the trading psychology program here at Warrior Trading, and he's today going to be hosting a FOMO Friday session. And one of the things that he was saying is that he's been getting a lot of feedback from other traders that he's working with who are saying that this market feels like it's sort of hit or miss. And I said I couldn't have said it better myself. It's hit or miss. Some days we're getting huge moves, 300, 400, 500%. And then other days it's just like crickets. Why is that? And I said, I know why it is. It's because of the theme that's currently working in today's market. What is that theme? Right now, today, the theme is cryptocurrency. Cryptocurrency is so hot right now that when a stock comes out with news that they've received a private placement for the purchase of cryptocurrency as part of putting it on their balance sheet as like a treasury reserve, essentially, the stock is going bananas. And so on a day where we get that headline, that stock goes crazy. And then the next day, for example, on Thursday, there wasn't any stock that had that news headline. So since that was the theme, everything else that was moving, it just wasn't moving that much because it was sort of off theme. So think about it like this. Imagine that, and I'll just pull up the charts here for an example. And we're going to look back at a trade from earlier this year that there was a couple that I just absolutely crushed. We're going to look at BMNR. BMNR. Yeah, this is the one I want to look at. So BMNR, this is a company that IPOs, and then they receive a private placement from an institution. And the purpose of the private placement is that all of the money that they've received from that institution is to go towards purchasing cryptocurrency. And that cryptocurrency is going to sit on the balance sheet of this company. And it's hundreds of millions of dollars. It's a huge amount. And so now, essentially, this company is a holding vehicle, essentially. It's a holding company for a cryptocurrency. And so the stock goes absolutely bananas, right? So after that happens, there's a lot of traders who missed that move. I mean, the stock went from, what was it, $10 a share to over $160. So you better believe that traders were like, I'm not missing the next one. And so what do you have to do? If you don't want to miss the next one, you've got to really understand the ins and outs of why that was able to make such a big move. So what was it about this stock that made it work so well? Well, what you'll notice is that there were a few other stocks that made similar moves this year. And in fact, they share several common denominators. And so what those are, and I'm going to lay them out for you briefly right here, are actually, really, I'm just going to summarize it, what I already taught in the class from last week. So they share similar characteristics of supply and demand. And they have a similar, and I'm going to do a spark for catalyst. And that was crypto. So the demand was high volume, super high volume, in many cases over 100 times higher than average. So super high volume. Now the supply for many of these stocks was far less than 10 million shares. And so I want you to picture this. You've got 10 million shares of supply, and you've got 10 million shares of buying volume, demand. So this is a limited level of supply. This is a relatively high level of demand. And let's just say in this scenario, the stock has gone up because of this catalyst plus 100%. What happens when the stock has 100 million shares of volume? All of a sudden with 100 million shares of volume, we're talking about 1,000%. And so if we look at some of these stocks, it's unbelievable the amount of volume that traded hands. So this day here was 54 million shares. If we look at BMNR, we jump back to that one. This day here, 110 million shares of volume. Holy smokes, this is a lot of volume. So the demand was unbelievably high, and the level of supply was very, very low. And we see this on a regular basis. So now that we understand, sort of in rough terms, the profile, what could we do? We could now search the entire market, and we say, we're going to look for stocks with a supply, and this is also known as the float, of less than 10 million shares. And so if we found 10 million share float, and we said the stock should already be up at least 10%, and the price should be approximately between 2 and 20 starting, And the volume should already be, maybe it doesn't have to be 100 times higher, but it should already be, let's say, 20 times higher, or even just 5 times higher. It should be above average, so something is starting to happen. If you did a simple filter like this and a scan of the market, this would probably return back on any given day, maybe 30 to 50 stocks. Now, if you then sort them for stocks that have the crypto catalyst, well, you might only have 1 or 2. And they might not even come every day. But boy, when they come, you already know you've got a stock that fits well within the profile of what has in the past produced big moves. Now, we always, sort of say just because it worked in the past isn't a guarantee it'll work in the future. But while the patterns aren't exactly the same, history repeats. It's not exactly the same, but it's always a very similar sort of flavor. So now if we jump back over to my metrics here for the first 5 days, you'll see that one of the criteria for me is that I trade really aggressively in the morning. I know that that's the time of day when I tend to make the most money. So, later in the day, I recognize that I don't do well. And so I focus this challenge on being aggressive during those first 2 hours of the day from 7 a.m. to 10 a.m. And I traded a little bit past 10 a.m. This would have been up to about 10:30 or 11. So this is the hour of 7 to 8, 8 to 9, 9 to 10, and 10 to 11. So the majority of the profit was in that window right there. Now, if you look at price and volume, you'll see that the price that I made the most money on were stocks between 5 and 10. That makes a lot of sense. It's a small account challenge. I can't afford the more expensive stocks that are above 20. So even though there were some more expensive stocks that were moving, I said, no, I'm just going to leave it alone. Win-loss expectation, 90% accuracy, account's been growing. I had a smaller day, which almost makes it look like it was like, it's sort of like the way it kind of curves here, but it's just because the way the days are spread out. I didn't have a red day. There was no drawdown. It was just a smaller green day. So nonetheless, that's where we sit right now. And of course, today, I will want to recap my trades from this morning. So we're going to do that in just a moment. But this is just the big picture, finishing the week with about $23,750. And again, that's growing the account from $2,000 all the way up to $25K in 5 days. Now, my choice to trade in the morning between 7 and 10 is based on my historical data, and this is over $20 million of trading profit here. I do the best trading in the morning. It's just the time of day when I'm the most focused. It's the time of day when companies are most likely to put out these big headlines, and so it is when I do the best. And this is a refresher of the 5 pillars of stock selection. Now, what I'm going to do in today's episode is I'm going to give you guys a link. It'll be pinned to the top of the comments and in the description, where you can download all of the PDF resources that I've assembled as part of this small account challenge. In my masterclass episode that I uploaded last week, which you guys are welcome to watch, I gave you the link for this same package of PDFs. My goal for this small account challenge is that I would document the entire process for you. I would walk you through from the very beginning of how I would approach trading, what broker I would use, how I would set up my layouts, and how I would set up my hotkeys, to how I would find the stocks each day, where I would buy, and ultimately where I would sell. Everything has been laid out both in the video form and documented in these PDFs. So make sure you guys download them, and I encourage you to utilize them in your own trading, but I always want to remind you that my results aren't typical, so make sure as you're practicing this strategy, which works really well for me, that you first test it out in a simulator. Prove that you can make money in the simulator. And if you can, only then consider trading with real money. So take it slow. The market's going to be here for you. So it's no rush. The last thing that I want to see is a beginner trader jump into the market with real money and then end up getting smoked on day one. That's no fun. I want you guys to be here for a long time. So let's go ahead and pull up the live trading archive from today, just as I've done for every other day this week. Again, if you've missed the big masterclass episode or days 1 through 4, you're always welcome to go back and check them out. They're part of the same playlist for the small account challenge. Warrior Pro members also get access to the complete live trading archive, whereas here on YouTube, I've been generally just uploading and sharing my first couple trades. Okay, so when I sat down this morning, first things first, as you can tell, I made, and this was a real lapse in judgment. I was sitting down, no doubt, wearing a green shirt and looking quite my best. However, this was not my lucky bumblebee shirt. So I had to switch that real quick. So got my sweatshirt on, doubled up, put on not 1, but 2. And This is I suppose I should show you the actual proof of me putting it on, just so there's no confusion of the good luck that this type of sweatshirt can bring. So I'm sitting down and I'm looking at the leading gapper. It's up 225% this morning. That's great. But as the catalyst in the crypto space, it's not. So, you know, I do end up trading it, but I was a little bit disappointed because I was kind of hoping that we would have, you know, potentially a stock that was in the crypto space already squeezing up from early pre-market. So this recording starts at about 7 a.m., as you can see right here. So as I sat down, I'm watching MRM, and you know, I'm thinking at that point that it's not really set up quite right. If I show you the chart on it, let's see. At some point here, I'll pull it up, and you'll be able to see. I'll just kind of fast forward a little bit. So the first few minutes, I'm sitting tight. Here's MRM. I pull it up, and you could see a huge move after hours, and then stair-stepping down, right? So what I end up doing, however, on this is I do take a trade. And I took a trade where I thought that maybe we were going to start stair-stepping back up. And that is a setup that I really do like. I got a couple other trades this week on that same setup. It's not my favorite, but it is a setup that can work, especially on the leading gainer. If it's not the leading gainer, you've got to be a little careful trading the backside of the move. I would say as a beginner, it probably does carry more risk than it's worth. But for me, I felt that was something I would consider. So we'll look at that trade in just a moment. That's going to be the first trade of the day. All right, so let's just jump forward a little bit. So right now it's like 7:15, 7:20, 7:25. All right, so MRM is still going sideways, but I feel like it's starting to base out here. We were actively sort of stair-stepping down, and now we're kind of holding here. And so I'm thinking all we have to do is take a step up, and now we're, you know, moving back in the right direction, right? That's what I'm looking for, is that first step up. So I try to be patient, because this is really important for long-term success in the market, is being patient. And if there's no good setup, I'm also willing not to trade. Now, I am going to pose an important question to you guys during today's episode about the future and the ultimate goals of this small account challenge. So make sure you guys stay tuned to the end so you can chime in on that question. All right, so basically just sort of sitting tight. 7:30 comes and goes. Now we're coming up to 8 a.m. I still haven't broken the ice with a single trade. But as I sit back down, I'm still sort of watching this, and I end up taking a starter right here. Now, this is an interesting trade. So I want to analyze this for a moment. So on this trade, and this doesn't happen to be a very good trade, but let's look at it. So here I decide I'm going to go ahead and pull the trigger. I think that we're holding. I think we're basing out, and I'm looking for that trade here. And then back of mind potential would be a curl up to the volume weighted average price. So I've got the platform up right here. I type in the ticker right here. We've got 15 million shares of volume. I type Shift 2 and I press the buy button. And look at this. This is, I have to say, this is a little frustrating. So watch again slowly. I press the buy button right there. So the buy button is now live. Now, and the order's live. Now, this is a stock that's got over 15 million shares of volume. There should be zero issue getting in or out. I should be able to fill instantly. But what happens is I send that buy order and I get filled 5 shares at 36.5. Okay, where are the rest of the shares? Now look at my limit order. It's for 451. So I've got room on my limit order, and now I'm just sitting here in my double sweatshirt waiting. So then all of a sudden I fill more shares at 41 right up here. And then all of a sudden I get the rest of them all the way up to 43. So I think I paid a little bit of a higher price than what I really should have paid for that. But nonetheless, when you look at this here, now you're seeing like, okay, we're starting to curl a little bit. This could work. So that's what I'm looking for. I'm looking for the curl. I'm looking for the break through the $0.50. So I want to see this break up over 450. But there is a problem here, because the moment I'm in this trade, it's 8 a.m. and look at this. BIAF has just hit the scanners, and this has news. So I'm in this, and I'm not looking at BIAF right now. I'm still focused on this stock, and I'm not up very much. You know, I'm kind of like all right, what's going on here? And then, but I'm still looking for that move. And you can see here, I'm at $1,500. And I'm thinking, all right, 65.70, can we push a little bit higher? But once again, we get to 56 and then we sort of stall out. So I end up taking it off the table up here at 50, 54. Some I sold, and I'm still holding some. If it had kept going, I would have just held, right? But it sort of stalled out here. So now I'm like, all right, well, and then look at that flush. So that's not ideal. So then we drop back down on the rest of the position, and I'm unwinding a little bit more of the trade, and we're back underneath the $0.50. And BAI, and the $0.50 is psychological. It's an important level. And BAIF is hitting the scanners. So I end up closing that position and switching to BIAF. I pull this up, I'm looking at it, and I'm like, okay, here we go. What are we working with here? And immediately I take a starter. And my thought on this is I'm looking for that squeeze up towards 650. Now at this point, I've already got a cushion on the day. I'm already up $1,000, so I can afford to take a little bit of risk. I take a starter position of 2,800 shares. So this is a smaller position than I've taken on other trades, but actually I've sent out the order twice. So now I'm adding and doubling, and now I'm looking for that squeeze up through 650. Here's my thought. When I looked at BIAF, there were a couple of things that I was thinking. Number one, it's US biotech company. That's fine. It's not Chinese. It's not crypto, but this is a stock with a float of less than 1 million shares, and it's moving really fast right now. I look at the daily chart, and it's a reverse split from back here less than a month ago, which is significant. We know that reverse splits reduce the float, and that we often see this sell-off, and then we could see this big pop. The 200 moving average is up here at 16. So we've got a decent amount of room to the 200, and I'm thinking this thing could have some potential. Now, it does have potential, and if we look at the chart on this, it's going to end up squeezing up to, let's see, BIAF. So it ends up squeezing up to a high of 7. But what's interesting on this is that it pops up to 7, and then it drops down. And then it comes back up to 7 and drops down. It comes back up to 7, it drops down. It comes back up to 7, it drops down. It comes back up to 7 and it drops down. What is happening up here at $7? Now, I'm going to speculate what I think is happening. So if we look at this stock, let's pull it back up on our recording. You're going to see a couple things. Number one, it's currently up 89%, which is great. It says HTB and SSR. It also has a Q right here. So the Q means it's a NASDAQ-listed company, a NASDAQ-listed stock. SSR means it's on short sale restriction. And HTB means it's hard to borrow. So it's not easy to borrow. It's not easy to short. Now, if we fast forward this a little bit, oops, sorry. So where was that? So I end up getting a couple of trades here on this one. We get this pop up to a high of 7. It pulls back. And then it ends up rallying back up. We get another move higher. So that's up here. We get a second move up to about 7. Then it dips down again. And then we get another move higher. So let's see. I get one more trade on it. Where's that? So like right in there. Was that? Yeah, something like that. Yeah, I got one more trade up there up to about 5,000. So that was that first loss right here, by the way. So on this one, watch this trade. I'll just show you this because it's a loss. So what I'm doing here is I'm buying the dip and I'm trying to time this break through 7, right? We've got this resistance level here. I'm like, here we go. Is this thing going to actually break through 7? And you can see that it's struggling. It pops up, it dips down, it pops up, it dips down. Now there's two ways to approach this. One is to buy and hold. And don't mess around, just give it a chance. And what I'm doing is I'm being much more active here in this small account. I'm jumping in, I'm jumping out. I'm jumping in, I'm jumping out. So right down there, I jumped in at 79 and it doesn't bounce, it dips down. I doubled down, averaged down, 3,000 shares. Still a small position, relatively speaking. It comes back up to 65, 69, and I sell here. And it ends up when I sell that I take a small loss on it. The ability to average down on a losing position is something that takes a lot of time and is not for beginners, because what you're ultimately doing is you're adding to a loser. So what's going to give you that conviction to do that is a lot of experience. Okay, so why was it that BIAF kept hitting this level? So HTB, hard to borrow, and SSR. So because it's on short sale restriction, some people would say that the reason this was failing here is because there were short sellers up here at 7. And while that may have been true a little bit later in the morning, that's not why it rejected here or here or here. When you have the stock that makes these big flushes like that, that's not from short sellers. So let's think about this for a second. What does short sale restriction mean? Short sale restriction is a mechanism put in place by regulators in the market to help prevent flash crashes. So when a stock is on SSR, short sale restriction, you can, let me get my blue pen. You've got the bid and you've got the ask right here. If you want to short the stock and the bid is, $5 right here, and then it's $4.90, $4.75, $4.50, $4, and then $3.75, let's just say. If the stock did not have short sale restriction, you could do a market order to sell. You could sell, let's say, 100,000 shares, and just everyone here, this person, let's just say, has 10,000 shares. This has 5, this has 10, this has 7, this has 3, this has 15. You do a market order to sell 100,000 shares, what's going to happen is you're going to clear out all of those orders, and you're going to get a giant red candle. So the price will have been kind of squeezing up like this, moving a little bit higher, and then you get this giant red candle where it goes all the way down. And that can happen when a stock does not have short sale restriction. But when a stock has short sale restriction, you cannot short by hitting the bid. The only way you can short is by putting your order on the offer or getting filled on an uptick, which means $5.15, $5.50, $6, $6.50, etc. Which means if you want to short this right now, you can't sell at 5. You could put your sell order at 5. I suppose you could do that. But your order won't fill until 5 is on the ask and people are buying from you. So you could put your order at 5.10. You could split the spread. You could put it at 5.08. But you can only sell shares when people are actively buying from you. You cannot sell to a buyer on the bid. In other words, you can't initiate that sell because that could create that push down. And so, the market it's kind of interesting because there are mechanisms in place to prevent flash crashes. It's not good for stocks to have their price drop 50% in one candle. Now, is it good for their price to go up 50% in one candle? Well, the market doesn't seem to complain about that. And so I'm a long bias trader, and there's no restriction on how much a stock can go up. Now, yes, we do have circuit breaker halts during regular trading hours, but the short sale restriction prevents the 50% drop in the stock, which would decimate the market cap for the company and could be really bad. There is no similar mechanism to prevent stocks going up. So it, to me, makes more sense to have a long bias than a short bias. But nonetheless, in this case here, we had short sale restriction, and so the price is coming up to $7. All right, so we come up to $7, so it's $6.90 by $7. And now a couple things could happen as it comes up towards 7. If there are people that want to short it, they could put an order on the ask to short, 10,000 shares or whatever. But because it's short sale restriction, they can only short on the uptick. They can't short by hitting the bid. So then how was the stock able to drop this hard? How were you able to have such big candles where it dropped? It's not from short sellers. It's not from people hitting it short. It's from someone who owns the stock bailing out. So now think about that. Who owns the stock? The company owns the stock. And there may be some institutional traders who own the stock, who maybe got it as, part of a secondary offering that was issued. Sometimes these offerings get placed with, private investors and things like that. So what I think, and I'm speculating because I don't know, but what I speculate is that there was a big seller up around $7. And I kept trying to trade the break of 7. And I had a couple trades on it that worked, and I had a couple trades that failed, but I kept waiting for that seller to break. I kept thinking that once that seller breaks, we're golden. We're going to see that big move. But we don't know how many shares that person was selling. Now, there are some ways to look into the filings and dig a little bit deeper. So I sometimes will go onto BAM SEC, BIAF. I can go pull up the ticker. I can look at the earnings for the company. When you look at the earnings, you look at the balance sheet, you can see how much cash they have. You can see, are they in a position where they're going to need to raise money? So currently their total assets, cash, accounts receivable, inventory, and prepaid expenses total out to $1.6 million. All right, so then you scroll down a little bit more, you look at their net operating expenses. The loss from operations is $2.5 million, and that's just in a 3-month period ending there in June. So it's like, okay, they're operating at a net loss. How much cash they have on their balance sheet? Not a lot. So that you sort of put 2 and 2 together, and it's like, yeah, this is the type of company that's going to be incentivized to raise money. And then look at this. They've got a shelf registration here. This is the right for them to sell more shares on the market. This is dated September 25th. What's today's date? September 26th. This is dated just yesterday. So this gives them the right to sell up to 700,000 shares. Now, wait a second. The offering price on these shares was $5.48, which means, let's just say, in theory, the people that own this stock decided they were willing to sell it at $7. Now, realistically, if they sold it at $7, how much are they making? $1.50 a share on 700,000 shares. It's not a lot of money. You know, they're making $1.5 million, not quite. But that's one explanation. Now, we don't know. There may be other explanations. Maybe those people are still holding their shares. You know, maybe there's insiders who have been holding shares of the company for a long time, and they said, you know what, the stock's up, 100% today. I'm selling at 7. And so every time it hits 7, they're dumping shares. It hits 7, they're dumping shares. It hits 7, they're dumping shares. And the way I think about these is that, and we saw this with GameStop, that when the company was selling shares, I mean, the stock was just dropping. There was so much selling. And you could tell exactly when the company was done selling shares, because finally, it ripped. And so if this, and I don't know that it's going to come back up today, but if it had been able, if whoever was selling at 7 finally was done selling, then then maybe this could have actually gone up to 10, 12, 14. We had some room on the daily chart. We had a gap fill on the daily from 630 up to 750 right here. And then we had more room up to 924, and then we had more room up to 1350. And then we had room up to the 200 moving average. So I know some of you guys are going to be watching this, weeks from now or months from now, because, it's day 5 of the small account challenge, turning $2,000 into 25 grand. And you may not feel you care a lot about the specific sort of nuances of this company, but these are the questions that I'm asking myself, and these questions come up every day. So this is the same kind of process that I go through. And the benefit for you guys is that while I'm trading, I've got my broadcast, I've got my chat room open, so you can hear my thought process. You can hear me analyzing the balance sheet, looking at the financials. And while it's just my opinion, it comes from all of my years of experience in the market. So, it's colored with that, with that position that I'm in. So anyway, got some trades on BIAF. And then at the open, interestingly, we had a stock IPO, MGN. Now, by the open, I was feeling, like a little bit cautious. I thought, I've got to be a little careful. Now, this is a company that just sold shares onto the market. Today's day 1, and it goes from $4 up to $9. So I was a little bit slow on jumping on this momentum, but it halted up once right here. It halted up a second time, and when it resumed from the second halt, I got in right here. And this is where I got in. We got all the way up to a third halt. Then we squeezed up just about to a fourth halt. Did it halt there? Now I can't remember. No, I don't think it did. It almost did, and then it pulled back, and then it halted down and started the move back down. In fact, this is a very clear sort of stair-stepping up, and then step down and step down. And so it's important when you're thinking about trading, you're focusing on trading the front side of the move and buying these pullbacks as early as you can. So if I jump back onto the slide deck, let's talk about the psychology of this pattern. This is the pattern that you often see me trade on BIAF and on many other stocks, buying that first pullback right there. Now, the way I find that pullback in real time is when the stock hits my scanners. So BIAF, when this trade first happened, we go back here, right here, I found this stock right on my scanners, right? So that's how I found the stock. It's hitting the scanners, it's moving higher, so that's where it's drawn to my attention. I pull it up and I'm waiting for this first pullback. Why does this first pullback work so well? So let's back it up. It works because a rapid move up attracts other traders. And this is especially true when the move is driven by breaking news. The first pullback formed is formed by profit taking from people who are holding from before the news came out, and possibly some early short selling. Now, if it's not a short sale restriction, if it holds at least 50% of that first move up, long biased traders begin buying the pullback. Shorts, who may be in, begin covering at high a day as the price makes a second push higher. I will typically buy that first pullback and the second pullback, and after this, I don't want to overstay my welcome. So trading the first and second pullback on the 1 minute chart, then I can do the same thing on the 5 minute chart. And this is what it looks like. That pop up, and then the dip down, and then the push higher. Focusing this week with the small account on setups that I was really confident in resulted in above average accuracy. My accuracy, as you can see here, 90% over the course of this week. We back up to my all-time accuracy here, and I'm at 68.5%. So my accuracy was well above average. And that's because in the context of a small account challenge, I was being a lot more careful, a lot more picky, which is absolutely the right move. When I'm trading in my regular account, I can afford to take a little bit more risk. And I will. I'll take a position and I'm saying, I'm going to let this work. Let's see what it does. And I'll take bigger size. And if it works, I get rewarded for that. But in the context of a small account, I've got to be more conservative. So I focused on trading the highest quality setups. The result was I had a great profit-loss ratio this week. The only losers I had were really small. We looked at it before. The average losers were $17. So $17, that's fantastic. So then I've got better profit-loss ratio, higher consistency, and what does that feed? Self-confidence, track record, confidence to take bigger size, to be more aggressive, increase profitability, taking more trades. Today was actually the most active day that I've had in the small account challenge. I have 53 tickets. So I was buying and selling very actively today. Other days, certainly earlier in the challenge, I was focusing on just a couple trades, but today I really got in the zone. I took a lot of trades. I was much more active. So now here's the big question for you. Where do we go from here? Today is day 5 of my small account challenge, and I went from $2,000 on Monday to $25,000 at the end of the week. Now, as you know, I had this goal of raising money for charity. And of course, this is very important to me. So now we're at $65,000, and that doesn't include you guys who hit the thumbs up today and subscribe to our channel here on YouTube, or who go back and watch some of the previous episodes and hit those thumbs up, because I'm still tallying. Now, for those of you guys that have not already checked out the masterclass, I'm going to put the link to that right here. This is the episode that I uploaded last week. Fantastic, full-length training. You have to watch that. And I'll put a link to another episode right here, maybe day 1 of the Small Account Challenge. So you guys can check that out. And a reminder, as always, trading is risky. My results aren't typical, and there is no guarantee you'll find success. So please manage your risk and practice in a simulator before putting real money on the line.